गंदा धर्म है सर, और इस धर्म का भगवान है ट्रस्ट। मेरे एक बहुत करीबी दोस्त थे, उन्होंने मुझसे कहा द मोस्ट एक्सपेंसिव थिंग इन द वर्ल्ड इज ट्रस्ट। चीप पीपल कांट अफोर्ड।
Ever wondered how the stock market, a symbol of global capitalism, can be a playground for scammers? It's a question that baffles many. At its core, the stock market represents the heartbeat of global finance, a place where companies and investors come together, where fortunes are made and lost. It's a sophisticated system, yet it's not immune to manipulation. Some individuals, driven by greed and cunning, find ways to game the system, turning this playground of capitalism into a hunting ground for their nefarious activities. They exploit loopholes, bend rules, and twist mechanisms to their advantage, often leaving a trail of financial devastation in their wake. These unscrupulous characters are not just figments of a Hollywood script, they exist in real life. One of the most notorious of these fraudsters was Harshad Mehta, whose scam rocked the Indian stock market in the 1990s. Harshad Mehta, also known as the Big Bull of the Indian stock market, was once a revered figure in the world of finance. Born into a modest family in Paneli Moti, Gujarat, Mehta's journey to the top was not one of privilege. He started his career as a salesperson in the New India Assurance Company before making a switch to the stock market. Driven by ambition and an uncanny understanding of the stock market, Mehta quickly rose through the ranks. By the early 90s, he was a household name in India, with his Midas touch seemingly turning every stock he picked into gold. His lifestyle was as extravagant as his personality, with a sea-facing penthouse in Mumbai and a fleet of luxury cars testifying to his success. But beneath the surface of his success lay a web of deceit and manipulation. To understand the magnitude of Harshad Mehta's scam, we must first delve into its mechanics. The scam was a masterful manipulation of two systems, the banking system and the stock market. Let's break it down, shall we? Firstly, we need to understand the role of bank receipts. These are essentially IOUs issued by banks when they lend money to each other. The borrowing bank provides government securities as collateral, and the lending bank issues a bank receipt in return. Under normal circumstances, these transactions are well regulated and above board. But Harshad Mehta saw an opportunity in the system. He began by convincing smaller banks to issue bank receipts, without actually providing any government securities as collateral. These smaller banks, lured by the promise of high returns, often complied. With these fraudulent bank receipts, Mehta then approached larger banks and borrowed huge sums of money. The larger banks, seeing the bank receipts, had no reason to suspect any foul play. After all, a bank receipt was seen as a guarantee of government securities. Now, you might be wondering, what did Mehta do with all this borrowed money? Well, this is where the stock market comes into play. Mehta funneled the borrowed money into buying shares of specific companies. This sudden demand for shares led to a dramatic increase in their prices. Remember, all this while, the banks were under the impression that their money was safe, backed by government securities. They had no idea that their funds were actually being used to manipulate the stock market. But the real kicker came when Mehta sold these shares at their inflated prices. The profits were astronomical, and the best part, he used a portion of these profits to repay the banks, keeping the rest for himself. This manipulation resulted in an artificial inflation of stocks, leading to a stock market boom. It was a house of cards built on deception and greed. And like all houses of cards, it was destined to fall. But that's a story for another scene. For now, we've unraveled the mechanics of the scam, the puppet master's strings that controlled an entire financial system. In 1992, the curtain was finally pulled back on Mehta's elaborate scheme. The unraveling began with a seemingly innocuous question, a simple puzzle piece that didn't quite fit. This was followed by an unyielding pursuit of truth, led by a tenacious journalist named Sucheta Dalal. Dalal, a financial reporter with the Times of India, was tipped off about irregularities in the Indian banking system. She embarked on a quest for answers, sifting through a labyrinth of financial jargon, bank statements, and insider testimonies. Her findings were nothing short of startling. She discovered that Mehta was exploiting a loophole in the banking system, using government securities in a way they were never intended to be used. Mehta was essentially using these securities as collateral to borrow vast sums of money from banks, then investing this borrowed money into the stock market. He was making enormous profits, and the banks were none the wiser. Dalal's expose was published on the front page of the Times of India, causing an uproar in the financial world. The revelations led to an intensive investigation by the Central Bureau of Investigation, India's premier investigative agency. Mehta was accused of manipulating the stock market to the tune of over $400 million, a staggering amount in the early 1990s. The investigation revealed Mehta's intricate network of accomplices, including top-ranking bank officials and business tycoons. The scam had been running for years, and the scale of the deception was enormous. It was a meticulously crafted operation, designed to exploit the system's vulnerabilities and greed. The revelation sent shockwaves through the Indian financial sector, causing a severe market crash. Thousands of investors, who had been lured by the promise of quick profits, found their life savings wiped out overnight. The scam was a stark reminder of the dangers of unchecked ambition and the importance of robust financial oversight. It marked a turning point in India's financial history, a moment of reckoning that brought about sweeping changes in the country's banking and financial systems. The aftermath of the scam was catastrophic, both for Harshad Mehta and the Indian economy. The fallout of the scam sent shockwaves through the Indian financial sector, rattling investor confidence and shaking the very foundations of the country's stock market. As the scam unfolded, the stock market plummeted, wiping out millions of rupees in investor wealth in a matter of days. The magnitude of the scam was such that it led to a complete overhaul of the Indian banking system and securities regulations. The Securities Exchange Board of India, or CBI, was given increased regulatory powers, and the government introduced new measures to prevent such scams in the future. Harshad Mehta, once hailed as the big bull of the Indian stock market, found himself at the center of a massive scandal. He was arrested and charged with criminal breach of trust, cheating, and conspiracy. The legal proceedings that followed were long and complex, dragging on for over a decade. The court proceedings revealed the extent of Mehta's manipulations. He had exploited loopholes in the banking system and used his influence to create a web of fraudulent transactions. The scam had been meticulously planned and executed, and the fallout was equally devastating. The Indian economy took a severe hit. The stock market crash led to a liquidity crisis, and many small businesses and investors were left in ruins. The scam also had a profound impact on the public's trust in the financial system. Many individuals, having lost their life savings, were left disillusioned and wary of investing in the stock market. In the end, Harshad Mehta was found guilty of his crimes. He died in prison in 2001, while still appealing against his conviction. His scam had not only cost investors their hard-earned money, but also damaged the integrity of the Indian financial system. Harshad Mehta's scam serves as a stark reminder of the potential consequences of unchecked greed and corruption. It underscores the importance of robust regulatory systems and the need for transparency and accountability in the financial sector. The Harshad Mehta scam taught several hard lessons to the financial world. It was a wake-up call that echoed across the globe, forcing us to question the systems we'd taken for granted and pushing us to reevaluate our notions of security and trust in the financial sector. Let's start with the first lesson: the need for stricter regulations. The scam was a stark reminder that regulations aren't just red tape. They are safeguards that protect us from the unscrupulous. In the aftermath of the scam, we saw a surge in regulatory reforms, both in India and abroad. Authorities began to clamp down on loopholes and tighten controls, ensuring that the banking and securities sectors were less susceptible to manipulation. The second lesson was about transparency. The scam exposed the murky underbelly of the financial world, revealing a landscape riddled with shady transactions and dubious deals. It was a call to action, a demand for greater transparency in the way financial institutions operate. This led to the advent of more robust auditing practices, the implementation of stringent disclosure requirements, and the establishment of systems that encourage accountability and transparency. The third lesson was about the importance of vigilance. The Harshad Mehta scam showed us that even the most respected institutions can fall prey to fraud. It reminded us that constant vigilance is crucial in the financial world. This means not only rigorous oversight from regulatory bodies, but also an informed and vigilant public that understands the risks and rewards of financial investments. Finally, the scam taught us about the human element. It reminded us that behind every financial transaction, there's a human being making decisions. And sometimes, those decisions can be driven by greed, ambition, or desperation. This is why ethics and integrity are as important in finance as they are in any other field. The tale of Harshad Mehta remains a cautionary tale, reminding us all of the potential dangers lurking in the world of finance. It's a story that underscores the importance of regulation, transparency, vigilance, and ethics. A story that reminds us that in the end, the safeguards we depend on are only as strong as the people who uphold them.
ओल्ड स्कूल हो या न्यू स्कूल, सबके सिलेबस में एक सब्जेक्ट कॉमन होता है, प्रॉफिट, और वो मेरा फेवरेट सब्जेक्ट है। बॉम्बई में स्टॉक मार्केट की घंटी बजती है ना रोज, उसी के साथ मेरे नाम का डंका भी बजता है।